Good afternoon. Welcome back, everybody. We're moving from a briefing now to bill hearings, and we have 13 bills today. I'm going to read the order right now. 9, 260, 59, 235, 236, 240, 245, 247, 248, 251, 264, 174, and 192. And we will proceed in our normal way. Sponsor will give their presentation. Their lead witness will have up to 5 minutes. All other witnesses will have 2.5 minutes. And when it is time for you to wrap up, we time all these. You will hear a voice from above that says, "Please wrap up." And do your best to wrap up as quickly as possible. Don't want you to leave in the middle of a thought. So finish your thought and we can go from there. With that, we're going to begin with the first on the list, and Senator West is Senate Bill 9. Senator West.
Thank you, Mr. Chair. Can everybody hear me?
Yes.
Great. This bill is a product of the Senate President's Advisory Work Group on Equity and Inclusion. It's Senate Bill 9. It's a pleasure to be with you to present it this afternoon. This was the same bill that we heard last year. Actually, I don't think it was your committee that heard it. It was assigned last year to EHE. So this year it's been moved over to Budget and Tax. Last year on the Senate floor, it was passed 47-0 and went over to the House of Delegates, where for whatever reason it languished and never was enacted before we adjourned in April. So this bill is, it's all about minority business enterprises. Ever since 1978, Maryland has had a minority business enterprise program to encourage women and minority-owned firms to participate in the state procurement process. Maryland's current MBE statute requires agencies to make every effort to achieve a minimum goal of 29% of the total dollar amount of their procurement contracts directly or indirectly from certified MBE firms. The oversight of the program is vested in the Governor's Office of Small Minority and Women Business Affairs within the Maryland Department of Transportation. This office also serves as the state's official MBE certification unit. In fiscal year 2019, Maryland's MBE achievement was only 17.9% of contract awards, well short of the 29% goal. The federal government also has an MBE program. It's entitled the Disadvantaged Business Enterprise Program. It's overseen by the U.S. Small Business Administration, but businesses must separately qualify as MBEs under federal and under state law. Under current Maryland law, to obtain a Maryland MBE certification, an applicant must fill out lengthy application documents, undergo an investigation, be the subject of a deliberative administrative proceeding, and then await an ultimate determination letter. A business which has successfully navigated federal statutes and regulations and qualified as a federal MBE must apply and qualify separately under Maryland's MBE program. This is burdensome to minority and women-owned businesses, and it deters participation in the state procurement process. So this bill, Senate Bill 9, merely requires the State Board of Public Works, which oversees state procurement, to adopt new procurement regulations that will enable a federal qualified MBE that has been certified under the Federal Disadvantaged Business Enterprise Program to become certified as a Maryland MBE without requiring the business to file any additional paperwork other than evidence of its federal certification. I noticed that the fiscal note in this case indicates that the eligibility guidelines for the federal certification are comparable to the requirements for the Maryland MBE certification. So in short, this bill changes existing law to provide that a federal certification will suffice and an MBE will no longer have to separately establish its eligibility under Maryland law. I appreciate the committee's consideration of Senate Bill 9 and will be more than happy to answer any questions the members of the committee might have.
Thank you, Senator. Brian Levine.
Thank you. Good afternoon, Mr. Chairman, Mr. Vice Chairman, and members of the committee. Again, for the record, Brian Levine with the Montgomery County Chamber of Commerce. And we thank Senator West for introducing this bill. We're here in support today of Senate Bill 9. And I'll keep my testimony short since the Senate did move on this bill in the past. But we do believe that this bill has a potential to create a more streamlined process for growing MBEs and minority business participation in state contracts. And that's why we support it. The Montgomery Chamber also recognizes that we are in a state with a significant federal government contracting community, and we support further growth in that community, which we believe this bill helps. And as part of the Chamber's efforts to focus on small minority federal government contracting, we've achieved a great deal of success in growing this entrepreneurship and success of small and disadvantaged federal government contractors through our Foundation's Veteran Institute for Procurement program, which is a free nationally recognized federal procurement training program for service-disabled veteran-owned businesses and veteran-owned small businesses. So just to keep my testimony short for those reasons and others, the Montgomery County Chamber of Commerce supports Senate Bill 9 and asks for a favorable report.
Thank you very much.
Mr. Chair.
Thank you. Good to see you. Questions? Very good. That concludes the hearing on Senate Bill 9. On to 260, Senator West.
Thank you, Mr. Chair. It's great to be here to testify a second time. This bill is a little more complicated, so I'm going to set the scene for the bill and then at the very end describe very briefly what the bill does. And it will be pretty obvious what the bill does once I get the scene set. So when a property owner decides to rent its property, it typically hires a broker to market the property, and it creates a pro forma financial statement for the out years, setting forth the projected rental income for the property and the property maintenance costs that it expects to incur. In most modern leasing contracts, the new tenant pays the broker a commission for the broker's services, and the broker in turn shares a portion of that commission, known as the broker rebate fee, with the owner of the property. Both the broker rebate fee and the costs that the property owner expects to incur to maintain the property during the term of the lease are components that are set forth on the pro forma financial statement. The Maryland Department of General Services controls an enormous amount of leasable space. DGS contracts with an organization known as CVRE, an international commercial brokerage firm, to act as the broker for the state's leasable properties. And when CVRE negotiates a lease on behalf of DGS, the new tenant pays CVRE a broker's commission. DGS has negotiated with CVRE for a broker rebate fee, which averages approximately 30% of the broker's commission. These broker rebate fees cover a large part of the state's operating and maintenance costs in connection with the leased properties. Unfortunately for DGS, the broker rebate fees are not remitted to the state at predictable times, and the state's need to spend money to maintain the rental properties also doesn't occur at predictable times. Under Maryland law, all money received by a state agency during a fiscal year, which is not spent during that fiscal year, escheats to the state, to the general operating fund at the end of the fiscal year. This policy makes sense in most cases, but in the case of DGS's broker rebate fees and its need to spend those fees to maintain the rental properties, the policy causes a serious timing problem. For example, for property A, DGS may receive $100,000 in broker rebate fees in April and book that receipt assigned to property A. In August, DGS may need to spend $60,000 on maintenance attributable to property A. Normally, the expenditure would be booked under property A and would reduce the amount of money remaining under property A to $40,000. But due to Maryland's particular escheat policy, $100,000 received in broker rebate fees in April would have escheated to the state on June 30th and would not be available to be spent in August. There is a complicated fix for this problem, which DGS goes through, but it would be so much simpler and easier just to leave the broker rebate fees in DGS's account so we could spend the money to maintain the properties. So with that long explanation to set the stage, Senate Bill 260 sets up a special non-lapsing broker rebate fee fund in the Department of General Services. The bill provides that all broker rebate fees would be deposited in the fund, and then expenditures from the fund may only be made in accordance with the state budget, including needed maintenance work on state properties that are under lease. In short, Senate Bill 260 will help the DGS to manage its leased properties more efficiently. Again, I appreciate the committee's consideration of this bill and will be available to answer questions.
Thank you, Senator. Nelson Reichart.
Yes.
Oh, is DGS just hearing for questions? Is that the point?
Yes. If anybody has any questions, thank you, Senator West.
Any questions for the senator or the department? Okay, thank you very much.
Thank you.
Thank you.
Next up is Senator McCray, Senate Bill 59. It looks like we're going to get a little presentation, video.
Yes, sir. It's not going to be like an Andy Serafini video. Be a good one.
You can begin anyway when you're ready.
Yep. Mr. Chair, members of the committee, this is Corey McCray for the record, coming to you on behalf of Senate Bill 59. I call this the Easy Pass debacle. Kim, if we could play the video, and then I will go into my oral testimony. Mr.
If something can go wrong with technology, it will.
I can't get it to pull up. I'm sorry.
No problem. Well, just signal me if you can, and
Okay.
I'll go on with my testimony, Mr. Chair.
Great.
So Senate Bill 59 comes from my own experience. I received Easy Pass charges from my credit card. I received 5 and within like a 2-week period. I didn't recognize that I wasn't paying my Easy Pass at that moment, and was instructed that all Marylanders or all folks hadn't been receiving their Easy Pass billing for several months. I actually thought my credit card had been stolen because of the multiple charges that had been placed upon my credit card from that standpoint. Mr. Chair, I do the regular thing that any citizen would do. You call Easy Pass and say, hey, what's going on with this? When I call Easy Pass, unfortunately, Mr. Chair, it was a 75-minute wait. So imagine hearing, once you want to know whether your credit card is under some form of fraud or been stolen, you have a 75-minute wait to hear that. I do, like a legislator, I felt like I was my own constituent at the moment. I reached out to MDOT to be able to better understand what is the issue and why would anybody have to wait 75 minutes for any government services. It was explained to me by the secretary and by the director at that time that no one had been charged at that time. And that was why I'd gotten 5 Easy Pass bills all at one time. I then said that I wanted to go through the charges that were made because, Mr. Chair, I'm very frugal. So even though the bill was made 5 months ago, I would like to know if I really made the bill. There were some of them that were just out of order. There was some where they were replenishing me, then taking things off, but we actually got it worked out. And then I started to get calls from a number of constituents just in reference to the issues with Easy Pass. And I realized that this is a larger issue than Corey McCray or these 1 or 2 offs. I've been sending them to MDTA. And I've been very in reference to addressing these issues. Let me be very clear. So when the issue is sent to MDTA, they do address the issue. But Mr. Chair, we know that many people may not always know who their legislators are. We know that when somebody gets a charge for a certain amount, what they do is they panic. They don't know what action to take. And sometimes they act as if it's going to go away because if they just ignore it. But that's not the case. MDTA wants their money. And when they don't get their money, what they do is they send it to the CCU, which then not only do you have possibly these charges, but now your credit's affected by the charges that's made in front of you, which brings about Senate Bill 59. And Mr. Chair, I just also wanted to acknowledge I was organizing around Wednesday, so it was a lot more people. You guys got off the hook, very lucky, because Wednesday was my original hearing date, and then it got moved to Tuesday on Friday. So it was supposed to be a lot more people on this issue. But what Senate Bill 59 does, it has the ability to waive the late fees that's charged for this $2 fee. So colleagues, I want to say the fee that we accrue if you have an Easy Pass, obviously it's higher if you don't, but you have an Easy Pass, you have a $2 fee that goes on it. I've never, ever seen a business that's able to mark up a 1,000+% late fee. So remember, if you're late for $2, they can charge you $25. So that ultimately is a $27. I've never seen that in any type of business where you get to mark up 1,000+%. So imagine what Senate Bill 59 does is it waives the late fee, and folks say, yes, I do want to pay my bill. So if they want to pay their bill, it immediately late fees only for the threshold in which we were not billing. So it's not saying 3 years ago you get your late fees waived, but during that threshold, your fee will be waived. It also gives you the ability to Easy Pass, the ability to set up installment plans. Let me be clear, if you do not pay your bill in whole, so you got a $300 bill, $600 bill, $900 bill, and it hits you, you don't get that luxury of setting up some form of installment plan with Easy Pass. You have to pay the bill in whole or it gets sent to CCU. I've already stated that if you go to CCU, your credit's impacted, but we do not have installment plans at the Easy Pass level from that standpoint. And we would be able to pull those back from CCU to be able to have those respective installment plans. The other thing is that we went tollless. So we went cashless tolls because we're in a health pandemic. You don't want people spreading the virus and things of that nature. But what happens is that indirectly has been a self-inflicted challenge upon us, because now you have all these folks that are driving through. And one of the things that the bill does, it is also pushes them to the greatest extent. It doesn't mandate, but to the greatest extent, set up some form of a digital wallet. We know that folks have Cash App. We know that folks have Venmo. Government has to start moving in a direction. This private sector has hit this a long time ago. It's time for them to start to move in that direction. It looks like Kim, do you have the video? But I am joined by two of my friends that have had challenges with the Easy Pass. But Mr. Chair, before she does the video, I just want to read this one email. This is one that I got 2 days ago. Issue resolved. But listen to this one, Mr. Chair. Hello, Senator McCray. I'm hoping that you can help me. Yesterday, I received a bill from MD Transportation Authority. Inside were 5 separate bills for video toll charges from the Harbor Tunnel for the past few months. The total was $30. The bills also said that if I did not pay the fines on 1/12, I'd be charged $25 per fine. I received a bill after it was due. I logged into the website immediately today and saw that now I owe $148 in tolls, as well as $300 in late fines, for a total of a whopping $448. I called customer service and was told the wait time was 75 minutes. I am a teacher and called during my 45-minute planning period. Once my planning period was over, I had to hang up because I had to get back to teaching. I paid the $148 in tolls, but not the $300 in fines. This is ridiculous. The fines are astronomical, and I received the bill after they were due. Is there any way you can help me with the situation? Mr. Chair, MDTA addressed that within 24 hours. I sent it over to him. She sends back, thank you. Tawana from MDTA contacted me today and left a message with a direct number. Keep in mind, she has 75 minutes. I explained my situation to her and she immediately waived the $300 in fines. I'm so appreciative that you responded as quickly as you did and reached out to MDTA for me. I contacted you because I read about Senate Bill 59, which you introduced. I'm grateful that you're working to protect the people of Baltimore and Maryland from outrageous fines and financial hardships. Mr. Chair, these are not one-offs. I'm sure that we've seen unemployment. We've seen MDH with the website. This is where government is not operating at its best, efficient and effectively. And I feel as though we have a responsibility to address this issue. Ms. Kim, if you're ready, I definitely will play that video and I'm done with it. I see the video. I see the email.
Can I talk for a second in the meantime while she's setting that up?
Sure, Senator.
My daughter just got a bill for an Easy Pass. The charge was from August and they just got around to getting the charges out. So just sounds to me like there's probably some administrative issues in that department that probably need to be looked at.
Sure does.
Senator, I couldn't get it. It was playing for me, but apparently you
No.
guys could not see it. So I can send it to the members.
Yes, ma'am. I'll take that. I will not try again. I will suppose, Mr. Chair. I saw the MDTA's response to their testimony. I just wanted to let you know I've been in 2 meetings with them thus far. I do have an amendment. I believe that one of the issues that they brought up is that CCU charges a 17% administrative fee when they do installment plans. I'm okay with Easy Pass, MDTA having that same level of a percentage threshold if they're financing this, and that amendment is before you all. And look forward to future conversations to addressing this challenging issue for our Marylanders.
Very good. Thank you for bringing the issue to us. You have a question now, Senator Griffith?
No, Mr. Chairman, you just said what I was going to say, which is thank you for bringing this issue. Having traveled across the state a little bit this interim, I received a few love offerings in the mail myself that I was not prepared for. And unfortunately, I received them, like you said, very late. They were already overdue by the time I received them. So thank you for bringing this up.
Thank you.
Okay, we've got 2 people who want to testify. Melissa Hippolyte.
Yes, thank you. Good afternoon. My name is Melissa Hippolyte. I live in Baltimore City and I work at a small nonprofit organization in Baltimore. I've been an Easy Pass holder for over 15 years and I regularly drive to New Jersey to visit my mother. Most recently, I was forced to pay almost $90 in Easy Pass fines between Maryland, Delaware, and New Jersey due to an expired credit card on my account. When I received my notification in the mail, I called to dispute the violation and pay what was owed on the missed toll, but there was a recording that said something along the lines of, due to high call volume, your call cannot be answered at this time. Then the call was disconnected. I then attempted to dispute the violation online, but received an error message on the website. Some time passed, and each time I received an updated bill in the mail, the amount was higher, but I couldn't get through to speak to anyone to dispute the charge. When I finally found a person to speak with, I was told that the debt was transferred to collections, and my only option at the time was to pay the $90 for the one trip or call with the Easy Pass person or call the collections department that held my debt. Though the young lady I spoke with was very apologetic, I still think that not having their other payment options was unfair for an honest taxpayer. I paid the $90 because I didn't want my credit impacted, then called my mother and told her how expensive the trip was. I think I speak for others when I say that something has to be done about the Easy Pass system across states. Thank you.
Thank you very much. Sure sounds like it. I won't get into it either, but I had another issue too. It wasn't with Easy Pass, but it was with the department. It was another sort of caught in a mail circle. that just added fines, and it's just, there's some issues there. We got a little work to do. Sashiya Parker.
Hi, good afternoon, Mr. Chair, committee members, and Senator McCray. My name is Sashiya Parker. I am a resident of Baltimore City and also the executive director of a nonprofit here in the city. My background before I got into nonprofit, I worked for the state government for 20 years. So I definitely understand administration, and it seems like this is just poor administration. My situation is a little different. I have Easy Pass, and I started getting the video tolls in the mail. Like Senator McCray, I'm saying, what is going on with these video tolls? Because they replenished my account, and it seems like it was double dipping. So it seems like some of those videos that I was getting, I did pay for on the back end through my automatic account that I have with Easy Pass. I have to be transparent. Like Senator McCray said, some people just do not follow up on it, and it just gets to snowball. And that's where I was. I did not get the 75-minute. I believe I got like 150-minute message when I called Easy Pass, and just had not called back. So when I heard about this bill and the special attention that was going on in that agency, I definitely reached out and knew that I had to put my testimony on the record, that I believe that legislators need to look into the administration in that agency to see what's actually going on. As far as my personal situation, I will reach out to Senator McCray's office to make sure that I am okay and to get help. But like I said, I'm a fairly engaged resident in Maryland, and we have to continue to advocate on these issues because there are many of Marylanders that do not have support. They do not know how to reach out to legislators or to agencies. So we want to make sure that this is handled in the best way possible. Thank you, Senator McCray, for inviting me to speak today. And thank you, committee members, for your consideration.
Thank you very much. Questions for anyone on the panel? Okay, thank you very much, Senator McCray.
Thank you, Mr. Chair.
Moving on to Senate Bill 235, Senator Jackson.
Thank you, Mr. Chairman. And members of the committee, and before I go, I'll take personal privilege. I travel in multiple states there, Senator McCray, so I'll be watching this piece of legislation. Senate Bill 35, Mr. Chairman, is a straightforward piece of legislation that simply allows the Maryland residents with permanent physical disabilities to claim a $1,000 income tax deduction. This bill is an expansion of the currently existing exemption for individuals who are blind, just adding those who are permanently disabled. Individuals with disabilities face a myriad of difficulties that often require the outlay of added expenses not encountered by those who aren't forced to live with challenges. Recent Senate census data from 2017 indicates that 586,300 Maryland adults live with a disability, which is roughly 13% of our total adult population. Approximately 39% of Maryland adult individuals with disabilities are employed. The median earnings of individuals with disabilities are about 30% lower than those of individuals without. From adjustments in living spaces to adjustments in transportation technology and personal care, this legislation will provide a small but much needed offset to the added expenses that these individuals encounter. While this legislation would come with a fiscal impact, it would be appropriate and appreciated recognition of the challenges faced by Maryland residents living with permanent disabilities. I also have an amendment in your packet, you should all have that simply clarifies the nature of the disabilities of those who would qualify for the deduction. With that, Mr. Chair, I'd ask you and the committee for a favorable report of this bill, and I'd be happy to try to answer any questions the committee may have. I also have Delegate Geraldine Valentino Smith who has championed this legislation for a few years now. And she certainly would have more opportunity to answer questions. She's speaking after me. Thank you, sir.
Thank you, Senator. Delegate?
Thank you, Mr. Chairman, members of the committee. It's such a pleasure to work with Senator Jackson on this important issue. He really stated a lot. I just wanted to clarify a couple points for you today. Look, every year, my committee in appropriations and you all in Ways and Means, we get together and we evaluate the tax code and we look at different proposals on amendments, on exemptions, on credits to ensure that we're alleviating tax burden in a fair and equitable manner. So several years ago, you can see in section 10-211B4, the state went ahead and created a $1,000 tax exemption for those that are blind. When we look back in the files, what we really see is it was because of the cost or potentially the added cost of Braille and how much more expensive it might be for the working blind. And so what we're suggesting is this many years later that we contemplate opening up that B4 to not only those that are blind, but those that actually have a physical disability. And so that's what the bill does do. As Senator Jackson said, the costs for this population to work are so much greater than you and I have as they try to adjust their homes, they try to adjust their technology, and they try to reckon with a lot of things that aren't covered by insurance that allow them to stay in the workplace. And we've got precedent in current tax code to identify those who are disabled. So the amendment that Senator Jackson and I have worked on and is in actually mimics what's already in the pension law for those that are disabled. And so what it does is it would require that in order to avail yourselves of the tax exemption, that you have a qualifying physician certify the nature of the disability is expected to continue indefinitely, and the individual is capable of substantial and gainful employment. So although there is somewhat of a fiscal note, I think we know that this money will only be respent in the Maryland economy. It will help support, what we said was just about 39% of the disabled who do work in our workplace on a regular basis. And while we respectfully recognize that there's a large portion of the population that define themselves as disabled based on cognitive or developmental disabilities, that we start at this point because the tax code recognizes physical disability to take this small step towards ensuring that this $1,000 exemption is not only granted to those that are blind, but also those that are physically disabled and working. And so with that, it was such a pleasure to work with Senator Jackson and hope that we can work to get this out this year as a priority for tax exemptions. Thank you, Mr. Chair.
Thank you. Matthew Rice.
Thank you, Mr. Chairman, members of the committee. My name is Matthew Rice. I'm the Director of Public Policy for the ARC of Maryland. I'm also testifying on behalf of the Maryland Developmental Disabilities Council and the Maryland Association of Community Services, as well as people on the go of Maryland in support of SB 235. And I think that Senator Jackson and Delegate Valentino Smith outlined very well why this is needed. I will say that as a working person with a disability who recently purchased their own home, I, along with many others, am looking for any way to save money on my taxes. And believe me, now that my home is my place of work due to the virtual environment, I understand that this will be of great benefit to many people who are seeking to modify their homes, just as I am, and also having to pay exorbitant costs in public transportation to maintain employment. I think this is in line with employment first policy as stated by the governor, and there is historical precedent for recognizing physical disabilities along with blindness. When Congress created the Library for the Blind and Physically Handicapped and forgive the terminology, that is the terminology that is used, that was created in the 1930s with the recognition that blindness and physical disabilities often face the same challenges. So for those reasons, we support this legislation and ask for a favorable report. For any additional questions, please see our written testimony. Thank you.
Thank you. Good to see you, Matthew.
Good to see you.
Lori Scott.
Good afternoon, Mr. Chair and members of the committee, and thanks Senator Jackson for bringing this bill forward. I am in support of Senate Bill 235 for income tax exemption for disabled individuals. My daughter is 19 years old, and she accesses the community with our van, our modified van, in order for her to go to school and education, have job coaching, have volunteer opportunities. And it's really, really important in this climate where both of my husband and I are kind of not working full time because of COVID and can't enter our job spaces because of COVID full time right now. That money has gotten a little bit tighter, and really concerned about her ability to continue to do what she needs to do and wants to do to access and integrate and be a contributing member of society. So certainly our people with disabilities who are working, they are oftentimes, as was stated by Senator Jackson, not paid hourly rates by the same means as far as the amount per hour as their non-disabled peers. And certainly those who are working can expect and would hope for any tax exemption that can be given to them. In the last 2 months, we spent $800 on a ramp modification for our van, $420 in electronics for electric wheelchair, and $385 to modify Cassidy's existing ankle feet orthotics because it had been less than 2 years since she had new ones. Insurance wouldn't cover it. So those are some real examples of real life pieces for her to be able to be physically as mobile as possible in her electric wheelchair, gait training, and safety. I think those are good examples of what we have to deal with as barriers when we are caring for and or a person with physical disabilities. So I hope that you can support this bill, and I thank you for your time today.
Thank you very much. Good to see you. Any questions for this panel? Oh, actually, it looks like I might have one more person. Patrick Gaiba.
Good afternoon, Chairman Gazone, members of the Budget and Taxation Committee. It's nice to see you again. My name is Patrick Gabau, and I'm representing the American Legion, Department of Maryland. Senate Bill 325 would greatly aid the 1,180 military and uniformed disabled veterans who, according to the U.S. Department of Veterans Affairs, are not blind and live in Maryland. We feel this measure would be most helpful, as Mr. Rice stated, and to the disabled and their families, particularly in housing expenses. Too often, disabled homeowners and renters bear greater expenses for modifying their home to meet their physical limitations than their counterparts who don't suffer the anguish of disability limitations. On behalf of the over 38,000 active duty and veterans who are members of the American Legion here in our state, we urge a favorable report on Senate Bill 325 and commend Senator Jackson and as well as Delegate Valentino Smith for their steadfast commitment to veterans, and for Senator Jackson while he was a member of the House and now here in the Senate. Thank you.
Thank you very much. Okay, questions for the panel? All right, with that, we'll end the hearing on 235. We'll move on to 236. Senator Salling.
Thank you. Thank you. And this is Senate Bill 236, Maryland Veterans Trust Fund, CAM for veterans, established the David Prez Hero Act, N22 a day. Dear Chair, Vice Chair, and committee members. For the record, I'm Senator John Ray Sally, and I would like you to ask, I'd like to ask you to consider Senate Bill 236 for your approval. This bill would work towards addressing our limited alternative health care options for veterans. The Department of Veteran Affairs released a study in 2013, and that did between 1999 and 2010, which showed that 22 veterans a day were dying from suicide. Mr. Perez, for whom the bill is entitled, was a veteran who lived here in our state, and unfortunately 2 years ago became another tragic statistic added to this list. Mr. Perez was a young, vibrant man that cared deeply about the issues and worked intentionally to help veterans get the treatment they need for their mental health issues. Many of our veterans are suffering from a various type of mental illnesses and issues such as PTSD, anxiety, and depression. And now over 2 years with this pandemic continuing, it has been tragically and a deadly time for our veterans. Post-traumatic stress disorder is a very real and very serious issue that many of our veterans face today. And regular medicine options may not always be the best treatment for them and the only treatment that they might get. There is a growing desire to look to alternative treatments for veterans. This alternative treatment is known as CAM, or complementary and alternative medical treatments. CAM treatments are treatments such as acupuncture and yoga, massage, related treatments, and other types. They are treatments as the VA notes and are not currently part of the mainstream. While the U.S. Department of Veteran Affairs do offer some CAM treatment, it is still an area that is being studied. And for what I have heard, sometimes it is difficult for veterans to access these treatments in a timely manner because they may not be accepted. This leaves a veteran in a tough spot of trying to self-fund for treatment. This bill would help and bridge that gap by allowing funds for alternative treatment so that our veterans can get the help they need. For those reasons, and for the, it was passed unanimous, and I believe we supported it too. So I hope and pray that we can do this again in the Senate, and it was held up in the House. So I appreciate this opportunity. And I don't know if we do, I knew we had a couple people did written testimony, but I hope we read that written testimony. I know it was the mother of David Perez, and I believe we have a great opportunity to help our veterans. Thank you, Mr. Chair.
Thank you. I have Laura Goodpasture. Is she here?
She's not.
Okay. All right. Thank you, Senator. We are going to move on then to Senate Bill 240, Senator Simon Ayer.
Thank you, Mr. Chairman. It's a pleasure to be before you.
You might remember we voted this one out last year.
Yeah, you took my thunder there.
So you can use your time appropriately.
Yeah, I was going to take about an hour and share about this, but seriously, I think this will be a quick bill hearing as there's no opposition. It is the same bill that we passed unanimously last year, but ran out of time in the House of Delegates. I wanted to let you know I did cross-file it this year with a member on the Ways and Means Committee, so hopefully it'll move quicker over there. It just simply adds sewing to the items to make clothes to back to school sales tax-free list for items that are under $100. I'll let my constituent give you more details on this bill. I believe she's online, and I want to thank the retailers for their support again and would ask for your favorable consideration.
Thank you, Senator. Danielle Schwartzman.
She never came on.
Okay. Well, your testimony was brilliant.
Yeah, she would have done a wonderful job. She's a wonderful lady, very accomplished has a doctor's degree and loves to sew. It's a tradition that she has with her grandmother. And so she testified last year. I'm sure it would have been just as good this year.
I'm sure it would. We'll hopefully get this one out the door quickly.
All right. Thank you so much.
All right. Thank you. All right. We are actually going to adjust a little bit. Now, Senate Bill 245 is going to be the last on our list. So now moving on to Senate Bill 247, Senator Hayes.
Yes, thank you, Mr. Chair and members of the Budget and Tax Committee. Senate Bill 247 is a bill that this committee heard last year, dealing with the SDATs, real property assessments, and appeals. The major difference between last year and this year is a tremendous fiscal note. Last year, the fiscal note was somewhere around $47 million. We have made changes to the language in this legislation and have been successful at reducing it from 47 million down to 37,000. So at least we could get, hopefully we could get some brownie points.
That's amazing.
Save some money. No, but essentially this bill was brought to me by one of my constituents who live in the Bolton Hill community, Miss Lisa Scott, who you will hear from and you heard from last year. And it does three things. The first thing that it does is provide in plain language description on SDAT's website about having owners understand the process by which SDAT come to their conclusions around assessment. So that's number one. Number two, it lowers the minimum value of a property improvements or renovations that can trigger a mid-cycle reevaluation from $100,000 to $50,000. And why is that important? Our current system awards, those who have the whereabouts or the means to invest $100,000 in their property to see any assessment in that process. We hope to provide a little bit of equity by reducing it to $50,000, thereby giving more opportunity for individuals to have their properties reassessed per value. The third thing that this bill does, and the third and final thing that this bill does, is that it allows an appeal authority, whether it is the review body at SDAT or the court, to review things other than just the simple criteria of market sales in the appeal process. And so though that is the bill that stands before you, Lisa Scott, who will come on in a minute, can share with you a more personal story that she had experienced just as she did last year, Mr. Chair and members of the committee. But hopefully you will have this bill favorable in making sure that we provide more transparency and equity in the process of assessments here in the state of Maryland.
Thank you, Senator Lisa Scott.
Sure. Chairman and members of the Budget and Taxation Committee, I appreciate you very much for allowing me to present testimony in support of Senate Bill 247 today. This testimony is similar, as the Senator Hayes said, to what you heard from me the last time a similar bill was up for consideration. And what I'm hoping to get across today boils down to two things. One, SDAT's assessment and appeal processes are opaque and flawed. Two, there are no means for resolving the lack of transparency and issues with the processes themselves other than legislation. By way of background, let me say that when I received my assessment notice in 2019, I was shocked that my property was assessed $107,000 to $147,000 higher than the other center unit properties on my block. That makes no sense given the properties are near identical. If you look at the last 2 pages of the written testimony I provided, you'll see a photo of all the properties followed by a spreadsheet with data that demonstrates that comparability. Aside from being built to similar specifications, there are properties on that list that should legitimately be valued higher than mine, considering one is a multi-unit and some properties have undergone extensive renovations, as the search of the permit record shows. So clearly something is very wrong with the assessment process, and I was never able to get to the bottom of my particular situation despite going through 3 levels of appeals, all of which I lost. I did, however, learn a lot about what's wrong, and I'd like to recount for you the problems that I see with both the assessment and appeal processes in the hopes that you will take action to remedy those problems with this bill. I'll begin with the assessment process. One, it is a black box. Nowhere and from no one at SDAT can you find information about how market value is determined, nor any information about all the factors that affect the assessment. After losing 3 appeals, it took consulting with an expert third party to understand that in my case, the discrepancy comes down to the depreciation calculation. This is something I would never have figured out on my own, and it is an issue that SDAT has been unwilling to address despite my repeated inquiries. 2, the letter every property owner receives from SDAT claims the assessment process is uniform, but as my case shows, it clearly is not. 3, the assessor is not required to provide any explanation or reasoning whatsoever for their value conclusion, depreciation calculation, or any other factors that affect the assessment. And 4, assessments benefit the wealthy because if you have or can secure the funds to purchase and renovate property, chances are your assessment value might never take those renovations into account, like the property 3 doors down from me, which was gutted and fully renovated per the permit records, yet somehow assessed at $100,000 lower than mine. That is unjust, inequitable, and arguably discriminatory. Now for the appeal process. The only argument that can be used in the appeal process is market sales. That's it, and nowhere is this stated definitively. It took me getting before a judge in Maryland tax court to understand this. 2, SDAT is selective when it comes to finding comparable properties to justify their assessments. During my level 3 appeal, they used 2 extensively renovated N units as comps for my property. Those were not comps. SDAT can always find higher sales to justify their assessment, which put homeowners like myself with no courtroom and legal experience and no means for understanding the assessment process at a clear disadvantage. And 3, property owners have no recourse if their dispute is with the assessment methodology itself, thereby absolving SDAT of any accountability for errors. So these are what I see as the problems with assessment and appeals, and based on conversations I've had with my representatives and a similar experience with the 2014 assessment cycle, I know these problems are not new. They are longstanding and widespread. For years now, I have paid higher property taxes than it appears I should, and this has never been addressed by SDAT, let alone corrected. So I ask that you pass Senate Bill 247 because legislation is the only recourse homeowners like myself have to bring transparency to the process and to correct the errors and inequities that exist within it. Thank you, Senator Hayes, for inviting me to give testimony, and thank you, senators, for your time and consideration. I really appreciate it.
Thank you very much. Questions? Thank you very much. That concludes the hearing on 247. On to 248. Senator Hayes.
Yes. Thank you, Mr. Chair and members of the Budget and Tax Committee. I know this is a new topic for the Budget and Tax Committee, but I'm really excited that it is now the topic within your purview. And I'm happy to present this bill to you today. Senate Bill 248 addresses the MBE Enterprises calculation as it relates to MCE. For those of you who may not be familiar with MCE is the Maryland Correctional Enterprises, whereas individuals who are incarcerated behind the walls here in Maryland often will be provided with certain skills as a part of their incarceration. Much of the furniture that adorns the State House and other state facilities is provided by MCE. And the reason this is because MCE is identified as a preferred vendor under Article 17 in the procurement code. And so what does a preferred vendor mean? And so in the state of Maryland, if you're a preferred vendor, state agencies in their effort to procure goods and services have to go to these preferred vendors first, right? And so those vendors are MCE, Blind Industry and Services, and then Employment Work. I just want to step back a little bit, and one of the things that I discovered and that I just want to bring to the committee's attention as it relates to MCE, and it's spelled out on their website, so it's no secret. Back in, I believe, the early 60s, the federal government identified that as a nation, we were exploiting those who were incarcerated in this country through prison labor. And so they outlawed the interstate commerce of goods and service that was made by prisoners. Maryland's response to that was to legalize it intrastate. And so MCE was still, thereby MCE was created, and allowing goods and services made by prisoners to be produced and sold here in the state of Maryland. And so that is the nexus in which MCE was created. If you look at MCE's annual reports, which were published on their website, in 2019, they earned a revenue of approximately $59 million. $59 million. Their gross net income was somewhere around $36 million. The individuals that make these goods and services that are provided, in many of our state agencies, whether it be the General Assembly or our colleges and universities, the average wage of these inmates is anywhere from, I believe, between 17 cents an hour or $1.16 an hour, way below the minimum wage. But as you all know, in our Maryland Constitution, although it, prohibits forms of slavery, there are exceptions for those who are incarcerated. So that's one of the loopholes in which they're able to do an end round around this. What this bill simply says, we have been, as a state, really trying to provide more opportunity for minority-owned businesses throughout the state, those who qualify under the MBE statute. But if you do business with institutions like MBE, that doesn't count against your goal. And so although we highlight a certain goal that we're meeting for as minority business participation, we're not getting a true picture of that, because if an organization or agency decides to do business with MCE, they're essentially exempt from being part of the calculation of goods and services that are acquired from MBE organizations. And so this bill simply asks that those goods and service that MCE be excluded from the calculation in which we derive our denominator as it relates to minority business enterprises. If you read the fiscal note, there's no guarantee that this will generate more business for minority businesses here in the state. But I will argue, and I believe that if we make a step in this direction, at minimum, it will provide transparency on what our true commitment is as it relates to minority business enterprises here in the state. And so, Mr. Chairman and members of the committee, without anything else, I urge a favorable report for Senate Bill 248.
Thank you, Senator. Robert.
Sashiya. How you doing, Mr. Chairman? I want to remind the senator that correctional enterprises services didn't used to be known as that. Back in the day when I was chairman of the governor's commission on privatization, that was under Governor Glendenning, it was called state use enterprises. And I remember when we started it back then, they only had about $6 million in the bank. I'm still trying to figure out where it went, but I guess since my term is over, I never will get the answer to that one. I support, and I represent, by the way, I was one of the founders of the Maryland Minority Contractors Association. I participated in the drafting of the Maryland Minority Business Program back in the mid 70s. I also was a consultant for the Federal Department of Transportation and drafted many of these programs around the country. A minority business enterprise, and as I know you have my written testimony, I'm not going to read to you the citations to the state government code. You can see those for yourself. A minority business enterprise is a business that is owned and controlled by one or more socially and economically disadvantaged individuals. Socially and economically disadvantaged means an individual who has been subjected to racial or ethnic prejudice or cultural bias. I need to stop here for a moment and apologize to Senator Hayes, because I think my remarks are probably broader than the bill. The bill itself was simply to exclude purchases from CES from the calculation of minority business participation. Quite frankly, my remarks go somewhat farther than that. My remarks say that you exclude purchases from anybody other than a real MBE from the calculation of MBE participation, because it dilutes the participation for those for whom the program was initially intended. Senator Hayes, I apologize, and you can disregard any remarks that are irrelevant or inappropriate for that reason. Economically disadvantaged individual means a socially disadvantaged individual whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same or similar line of business who are not socially disadvantaged. Businesses owned, controlled, and operated by minority persons are eligible for preference in subcontracting opportunities on state contracts. Disparity studies are the means by which it is determined whether minority and socially and economically disadvantaged persons have actually been excluded from state procurement opportunities, and how much of a preference is needed to overcome the effects of and as a remedy for that past discrimination. The individual groups that are included by means of a disparity study as those eligible are listed in the code. I'm going to skip. State agencies report for annual minority business procurement to the dollar amount of contracts with certified minority business enterprises. Those goals to be enforceable must be derived from appropriate disparity studies that demonstrate that those individuals or groups granted a preference are the victims of past discrimination or the effects or its effects, and the goals must be, to the extent that race is taken into account, narrowly tailored, as we all know from the Croson decision. This bill, in short, and I'm not going to read the whole thing to you. This bill, in short, as I stated a moment ago, simply says it's not to diminish the preference for any other group. It's not to say that any other group is not entitled to a preference. It's simply to say that the preference that's established by means of disparity studies, that to prove that minority businesses that are owned by people who have suffered from racial discrimination are eligible, that the government should not count purchases from any business that has not been so determined, that has not been so certified. Presently, I believe and that the purchases made from CES, as well as from other organizations that are not minority businesses, are credited. The government agencies are taking credit for those purchases and applying that against the goals that are established for minority business participation. Here's the disconnect. The goals are established based upon the actual minority businesses, that is the racial ownership of the business. So the goals are based upon the capacity of that group, but then that capacity is diluted by purchases made from other groups. That's wrong. It shouldn't be. It is not the intent of the law. It wasn't the intent when I helped draft it in 1978. It's never been the intent. And I think it's an unforeseen, I think it's an unintended consequence. And I hope this committee will favorably report on the bill. That's it for me.
Very good. Thank you. Any questions for Senator or his witness? Okay. Thank you very much for being here. Appreciate it.
Good day to all.
Okay. One more.
This is one more and the last one, Mr. Chairman. Thank you, Chairman Gazone and members of Budget and Tax, for hearing me out. Senate Bill 251 is a bill that you heard on last year. There has been no changes made to this legislation. It will authorize a subtraction modification in Maryland income tax for the first $50,000 earned by a person who is at least 100 years old. This legislation seeks to recognize our centenarians for the role that they have played in building our society and in enhancing our community well-being. After 100 years of dutifully paying taxes, they have more than contributed their fair share to our state. And so you have my written testimony, Mr. Chair. I believe last year there were some prohibitions around certain tax cuts or whatever, and fear that it may have an effect on some of the federal funding. I'm not sure if those issues have been resolved or what have you, but we wanted to bring this bill back to definitely, highlight and to celebrate those among us who have achieved such an important milestone in their lives of reaching at least the age of 100 here as Marylanders. And so, Mr. Chairman, members of Budget and Tax, I please urge a favorable report for Senate Bill 251.
Thank you, Senator. Tammy Bresnan.
Hi, good afternoon, Mr. Chair and members of the Budget and Taxation Committee. I am Tammy Bresnahan with AARP Maryland. I'm the Director of Advocacy. We represent 870,000 members. What would be nice to know is how many of those might be 100, but the latest CDC reports, roughly 70,000 people in the United States are centenarians, meaning that about 0.2% live to be 100. So the numbers are very, very small. I don't know about you, but I'm a 7th generation Marylander, and I had one relative who was born in 1892 who lived to 2001. She was 109 when she died, and she often credited her life on Tillman Island as the reason for her longevity. We thank Senator Hayes for putting this legislation in. It's a recognition of a lifetime, and we respectfully request that the committee issue a favorable report for Senate Bill 251. Thank you.
Thank you very much. Questions for Senator or witness? Thank you very much for being here. 264, Senator Elfreth.
Thank you so much, Mr. Chair. Ladies and gentlemen of the committee, for the record, Senator Sarah Elfreth presenting Senate Bill 264. This committee, while we don't oversee renewable energy, we have dabbled in and heard bills on the tax code side of certainly solar panels and how we can, creatively use our tax code to incentivize various behaviors, including how do we actually achieve our goal of getting to 50% renewable energy by 2030, as set out by the Clean Energy Jobs Act that we passed in 2019. This legislation before you seeks to kind of tailor a tax incentive to achieve greater rooftop solar and other community-based solar opportunities, tailoring it to ensure that those new solar developments would benefit low and moderate income customers in Maryland. So referring it to it as a bit of a twofer in terms of helping us get to our renewable energy goals overall, but ensuring that the benefits are actually going to Marylanders who could use a little bit of help with their energy bills. So the bill would do a number of things. It would incentivize these projects by requiring an exemption from county and municipal property taxes for community solar projects that serve more than 50% of their power for the benefit of these low and moderate income households, and which are installed on rooftops, parking lots, or brownfields. We're going to hear from a number of stakeholders today. We've been working closely with the Maryland Association of Counties to get to a place where everybody's comfortable here, that we are certainly moving closer to our goal and serving the households who need it the most, but not in a way that is overly burdensome to our locals. So, Mr. Chair, we are mid-draft of an amendment that is going to do 3 things, and it's listed in your testimony as well, committee. 1, strike energy consumption from the language. 2, to create a 5-year sunset on the exemption and require reporting of the use of this exemption so we can accurately measure how effective this program is, and hopefully it will prove that it is quite effective, that it is not burdensome to our locals, and that it is achieving our goals of increasing our renewable energy usage and benefiting the families that could use it the most. And Mr. Chair, I'd like to thank Senator McCray for being my partner on this. This is one of those bills that is important to across Maryland, but particularly for my district. We have the second largest population of affordable housing units in Maryland outside of Baltimore City. And we are currently in the middle of redeveloping quite a few of them. And it would be a shame or a sin, as my mother would say, if we did not also think about the opportunities here to increase our renewable energy usage and benefit those communities that need it the most. And the bill lays out that 25% of the energy that's produced will be going to those households that need it the most. So with that, Mr. Chair, I have a wonderful panel and I would request a favorable report.
Thank you, Senator. Lynn Heller. Oh, Senator Edwards, you got a question for the sponsor?
Yes, I do. They're in the title of the bill, community solar energy generating. What's the definition of community? You mentioned three things, I think: rooftops, parking lots. Then you said brownfields. So what can you be a little more specific on what the definition is of community solar energy generating systems?
Sure, I can try. It's not my issue area of expertise, but we have a community solar program here in Maryland. I think folks are pretty familiar with that. That seeks to expand our renewable energy portfolio and meet our goals that I mentioned before. That allows for folks who might not have their own household to participate and buy into the community solar program, so that they can receive that energy from a renewable source, but might not themselves own that house or that rooftop. I think I explained it correctly, but if one of my panelists would like to correct me.
Brownfields, you know, in Garrett County, there's a huge company building a 1,000-acre solar farm. That would not be considered a community solar generating system.
If it depends on who's benefiting from that energy that's produced, Senator.
Well, it'll go into the grid, so a lot of people will benefit from it. I asked because this is a major economic development for Garrett County. We're talking like $250 million investment. That's why I asked the question about the brownfields. What, you know, where is it cut off there?
From my understanding, Senator, to participate in community solar, it depends on where that energy being produced is going to, who it's going to, who it's benefiting.
Okay, thank you, Mr. Chairman.
Okay. Lynn Heller.
Mr. Chairman, I know she's logging on. She might be having some trouble with her connection.
Okay. You want to go ahead?
I would be very happy to. For the record, thank you very much. For the record, my name is Kristen Harbison. I'm the political director for the Maryland League of Conservation Voters. Maryland LCV works at the intersection of climate policy and environmental justice, and this bill is one of our top priorities because it supports both of those visions by addressing the inequities of community solar programs and helps low and moderate income communities realize both the economic benefits of the community solar projects. Lynn Heller, my board chairman, who is logging on and hopefully will be able to testify in a moment, when there she is, can go into more details to answer the senator's question about community solar. She is an expert in the community solar development field. We thank Senator Elfreth and McCray for their leadership on this issue. And I strongly encourage you to watch the House bill hearings of HB 76, this bill's cross-file, to listen to the compelling testimony presented by Kimberly Armstrong of Solar United Neighbors, as well as to read testimony submitted by Dr. Sarah Vaya of the University of Maryland, neither one of whom had conflicts and were able to be here today. But Ms. Armstrong spoke compellingly about the importance of this bill for workforce development and education, and Dr. Vaya's testimony outlines the benefits of the project to encouraging community solar construction on already developed land rather than on agricultural and undeveloped space. Additionally, this bill is part of a comprehensive climate legislation that's been advanced as a priority leaders in both chambers. This is a top priority. This legislation is a top priority for Maryland League of Conservation Voters, and we strongly urge a favorable report. Thank you very much.
Thank you. Is Heller here?
Yes, I am. Thank you, Chair and committee members. I am Lynn Heller. I'm the chair of the CEO of the Climate Access Fund, which is a statewide nonprofit green bank that focuses on expanding low-income access to solar power. For the record, I also am honored to serve as the board chair of the Maryland League of Conservation Voters. As we all know, Maryland is in the midst of a transition to clean energy, but thus far, lower income communities have been the last to experience the economic benefits of that transition, even though they need them the most. This inequity exists within Maryland's community solar pilot program. Most community solar projects to date do not serve LMI, low moderate income households, because these projects cost more to develop. And most community solar projects are not located in communities disproportionately impacted by climate change, but rather on large tracts of open land, again, because smaller, more urban projects cost more. SB 264 addresses both of these challenges by eliminating the personal property tax for these types of projects, reducing energy costs to the project as a result. The intent behind the bill is to incentivize solar developers to serve more LMI households and to locate projects in under-resourced and overburdened communities. The Climate Access Fund is working on a project in the Madison East End neighborhood of East Baltimore, which I want to tell you a little bit about just to give you a sense of the numbers of what we're proposing here. In this neighborhood, more than a third of family households live below the federal poverty line, and the project we're developing will be located on the rooftop of a local school where 100% of the power generated by the rooftop project will save roughly 175 LMI families in the community 25% on their electricity bills, which is equivalent to about $35,000 a year collectively. And by contrast, the personal property tax would be roughly $11,000 a year. Again, this is in Baltimore where the property tax rate is higher than anywhere else in the state. $11,000 in foregone taxes is not a lot for the city of Baltimore, but $35,000 in additional spending money would be significant for the neighborhood. While the proposed tax exemption is not the only thing that will make these types of projects viable across the state, it is a really important step in the right direction. I urge a favorable report, and thank you for your time.
Thank you. Leslie Elder.
I don't think she's here.
No. Okay. Kevin Canale.
Good afternoon, Mr. Chairman, members of the committee. Kevin Canale here in support of this legislation with amendments. You have my written testimony, and I think you've heard a lot about what the bill does, the nuts and bolts. I'll just make a few points here. First of all, counties appreciate this bill because we're interested in incentivizing solar on rooftops and brownfields as opposed to prime soils and ag lands. And we also appreciate the senator working with us to address some of the concerns from local governments. And admittedly, the fiscal note on this bill is small, but that's only before we take into account what community solar could be in Maryland. We see bills that are seeking to expand community solar, raise megawattage caps, et cetera. So we're concerned a bit about what this bill could mean for local revenues in the long term. And a lot of tax matters come before this committee. Many times it's state tax policy that affects local revenues. But in this case, this is all about local revenues. And we feel like local governments should have a say in local revenues. So Maryland has a long history of using the personal property tax to incentivize, important policy goals, such as business development, et cetera. But normally it lets local governments decide which of those incentives to implement locally. That way they can control the amount of revenue that they're willing to forego for that benefit. So with that, we're happy to work with the committee, continue working on this bill, working with the senator to address some of the local concerns, but we'd ask for a favorable report on this bill with a local option amendment so that local governments can have a say over local revenues.
Thank you very much. Any questions for Senator or the panel? Okay, that concludes the hearing on Senate Bill 264. Moving on to 174. This is a department bill. Maryland Department of Health. Heather Scheck.
Yes. Thank you. Good afternoon, Chair Gazone and committee members. Thank you for the opportunity to testify in support of Senate Bill 174 on behalf of the Maryland Department of Health. My name is Heather Scheck. I'm the Director of Governmental Affairs at the department. Senate Bill 174 seeks to do one thing, and that's to extend the sunset of the Mortality and Quality Review Committee, the MQRC, for an additional 10 years or until December 21 of 2032. Just a little bit of background on what the MQRC does is it's one link in the process of reviewing deaths and reportable incidents in the programs and facilities licensed or operated by DDA and BHA. The Department of Developmental Disabilities Administration and the Behavioral Health Administration. Its primary goal is to identify patterns and systemic problems within DDA and BHA provider community and make recommendations to the Secretary of Health regarding actions to prevent avoidable injuries and deaths and to improve quality of care within those facilities. So the MQRC reviews all deaths and reportable incidents at state residential centers, forensic residential centers, and community-based agencies licensed by DDA. The purpose really is to protect individuals from harm and to enhance the quality of services provided to them. The MQRC also reviews deaths occurring in inpatient or residential treatment settings, residential crisis services, group homes, residential rehab programs, and other programs licensed by the BHA. So if there's a death in any of these programs and the person is not in hospice care, it must be reported. So once a death is reported, our Office of Healthcare Quality completes its review and investigation, and the case is then presented to this committee, which completes its review. And so the committee uses the information and data gathered during these death investigations to make recommendations to the Secretary of Health regarding actions to prevent avoidable injuries and death, and again, to just improve the overall quality of care. So as you can see, the MQRC is doing important work that provides valuable information, data, and recommendations related to improving the safety and quality of care for Marylanders. The bill has no fiscal impact and simply extends the authority of the MQRC for 10 years. So as such, the Department of Health fully supports Senate Bill 174 and respectfully requests the committee return a favorable report.
Questions for the witness? Thank you so much. Appreciate it.
Thank you.
Senate Bill 192. It's also a department bill. This is MDOT, I believe, or
yes,
his office. Yeah. Yes.
Yes. How are you? Good afternoon, Chair Gazzoni and distinguished members of the committee. For the record, I am Earl Lewis, Deputy Secretary of the Maryland Department of Transportation. Thank you for allowing me the opportunity today to speak in support of Senate Bill 192, which provides for the continuation of the state's Minority Business Enterprise Program and extends the due date of the disparity study report that provides the legal basis for the program's implementation. By way of background, Maryland's MBE program was established in 1978 to ensure that small, minority, and women-owned businesses had the opportunity to participate fully in state procurement activity. The MBE statute currently provides that the program will terminate on July 1st, 2022, prior to each periodic reauthorization, and to ensure that the MBE program remains constitutional, the state periodically commissions a disparity study to evaluate the continued compliance of the MBE program with the requirements of the Crozon decision and any subsequent federal or constitutional requirements. Maryland uses this study not only to provide the evidentiary basis for the MBE program, but also as the evidence to support all the state's minority business initiatives, including, for example, application of the MBE program to video lottery terminal facilities and public-private partnerships. The study examines whether there is continued discrimination against minorities and women in the Maryland market by evaluating disparities in state contracting data, which is generally referred to as public sector data, as well as disparities in wages, business owner earnings, access to credit, and business formation rates, generally referred to as the private sector data. Pursuant to 2017 legislation, the disparity study has been initiated by MDOT, the state's MBE program certification agency. Due to complexities of the procurement for the consultant and unforeseen circumstances, completion of the study has been delayed, and we're anticipating that the report will now be submitted to the Legislative Policy Committee in September 2023. Senate Bill 192 also includes a concurrent extension of the ME program sunset date so that the program can continue while the study and report are finalized. For these reasons, I respectfully request the committee grant Senate Bill 192 a favorable report. I believe Secretary Ree is also here to speak on the bill.
Great. Secretary Ree? Jimmy Ree?
I'm sorry, I had my mic, I was on mute.
Oh.
Apologize. Well, good afternoon, Mr. Chairman.
Good to see you.
Good to see you, sir. Mr. Vice Chair and distinguished members of the Budget and Taxation Committee. For the record, I'm Jimmy Ree, Special Secretary of the Governor's Office of Small, Minority, and Women Business Affairs. And I want to thank you for this opportunity to testify before you in support of Senate Bill 192, which provides for the sunset extension and thereby continued operation of Maryland's Minority Business Enterprise Program, simply known as MBE. Now, Maryland's MBE statute currently provides that the program will terminate on July 1st, 2022. And as you already know, prior to each 5-year reauthorization and to ensure that the MBE program remains constitutionally compliant, the state commissions a disparity study. The study examines whether there is continued evidence of discrimination against MBEs in the Maryland marketplace, such that will provide a strong basis for continued implementation of race and gender conscious programs such as the MBE program. Now, the most recent study is delayed and the timeline for completion is approximately another 18 to 24 months. In the interim, we cannot allow this program that aggressively drives the inclusion and participation of minority and women business in a myriad of state contracting opportunity to lapse. So Maryland's MBE program, as you may well know, is the gold standard among all such programs in the country. And as such, we have a duty to maintain our sound legal framework, as well as continue to seek opportunities for growth and expansion. Now, Maryland's MBE program is important to the state's economy. In FY 2020, it supported $28.7 million in state and local tax revenue. At same year, each dollar paid to an in-state MBE supported $1.77 in total economic activity. So as we continue our economic recovery from the pandemic, the MBE program ensures opportunities exist for small minority and women-owned businesses within the state contracting arena. So in closing, I would like to thank you all for your continued support of Maryland's small, minority, and women businesses, as they are truly the backbone of our communities and drive our economic growth. The Governor's Office of Small, Minority, and Women Business Affairs respectfully requests a favorable report on Senate Bill 192. And I have members of my team here to answer any technical questions that you may have. Again, thank you for your time and consideration.
Thank you very much. Any questions? Thank you very much. That concludes the hearing on Senate Bill 192. All right, next up is 245. Senator Kagan, are you on board?
She is not. I will call her office again. She'll be on momentarily.
I have a series of meetings starting in 10 minutes. I'm sure others of us have things too. Sorry, guys. Just hold for a couple minutes.
She's coming in.
Senator Kagan.
Hello, Mr. Chairman. I'm so sorry. I've been popping back and forth and the chairman needed me to chair. I'm sorry if I kept you waiting. I'm Cheryl Kagan, very proud to be the senator for Gaithersburg and Rockville, and here with the bill that you have heard about for 5 years now. I am really hoping this is the last time I have to come to you about Nimble, the nonprofit interest-free micro bridge loan. So colleagues, especially during COVID, when there is an increasing demand on our nonprofit organizations that provide such vitally important services in every nook and cranny of our state, we need them to not have to worry about cash flow so they can worry about their mission. That means that if they have gotten federal, state, county, or municipal government grants or contracts that often require them to prepay, to hire the people, to do the trainings, to rent the hall, to provide the services, and then get reimbursed. And sometimes that can take many, many, many months. They need a bridge loan in order to continue their work. Nimble offers up to $25,000 for a nonprofit in these circumstances, so they can continue their work. So you all may or may not remember, not all of you were here, but in 2017, when we first passed Nimble, the plan was to set aside $1 million, one time, $1 million. And as a revolving loan fund, it would never need to be replenished because the money would go out and then get repaid as soon as the nonprofits' promised funds came in. The money was snagged for other purposes, which I understand happens. And Henry Bogdan from Maryland Nonprofits and DLS Budget Geniuses were able to help us launch the program by identifying $187,500, $187,500. And for the last 5 years, with $187,500, they have been able to make 17 loans. Even with that paltry amount of money, 17 times, they have been able to provide much needed bridge loan funding for nonprofits around our state. So I know you guys work with numbers every day, but I just want to be clear that even with the additional $150,000 that this committee, and I want to give a shout out to all of you to help find another $150,000 last session that was fenced off, and the governor did approve it. We are talking about 0.0000644083% of our budget, for a total of now, it's $337,500. So this whole bill, the fact that we are having this hearing is 5 years ago, we were hoping to have a revolving loan fund of $1 million. So regardless of what the fiscal note says, and if there is a lack of clarity, we need to clarify, but this bill is asking for the balance of $662,500. That's it. That's it. And even if it's fully funded at $1 million, we are still talking about 0.0000190839.6%. And thank you to my chief of staff for doing the math work. The source of funds, there's some people who have questions about where the money should come from. Again, $662,500. Find it where you want. But please let us stop trying to stress out. Now, there are people that are going to come and say, the demand's not there. And you know why the demand's not there? This is a chicken and egg here. The Department of Commerce created a marketing program so that nonprofits would be aware that this money was available to them. But because there was only $187,500, they didn't want to create more of a demand than there would be supply of dollars. So it has gotten out a little bit through word of mouth, and therefore there has not been too much demand. Well, now that there is $337,500, we can get the word out a little bit more, but it would be really nice if the marketing program that was created 5 years ago on this program could actually be rolled out. Right now, if you want to learn about the program, you have to go to the Nimble website where you apply. It's a very easy, low-hanging fruit, quick turnaround process. And I have to give a shout out to Darla Garrett and colleagues at the Department of Commerce, because they really do a good job of turning things around, of holding people's hands and making sure the process is easy. And they make sure that the funding is available in a week or two. And what you'll see in your folders are examples of people, of nonprofits that waited more than 5 months for promised funding, more than 13 months for promised funding. In the meantime, they still have to pay their staff. They still have to pay their rent and other expenses. So this is a really small program that makes a difference for nonprofits around the state. And if the funding were there, then more people could learn about it. I encourage you to spread the word to nonprofits in your districts. I'm hoping that people watching it now will learn about it and share the word. We will hear from Henry Bogdan, who is all things an expert nonprofit, and Nancy Easterling from Historic Solderleaf Plantation. She's going to tell her story about getting a Nimble grant twice in Southern Maryland. Elise Salzberg, who
I've got the lineup, Senator.
You've got the lineup. Sorry. So with that, Mr. Chairman.
Yeah, and just as a reminder to the committee, I think we were generally look at this pretty favorably. It was the source of funds last year that was the complicating factor, and we worked hard to try to accommodate, and appreciate you recognizing that. But we obviously are in a different place this year, hopefully, after negotiating everything that we can negotiate with the governor, that we can come up with the kind of money to make something like this happen.
If I could just close with 2 quick more things, Mr. Chairman.
Yeah.
One is that a lot of times nonprofits are overlooked. They are not appreciated because we take them for granted. They are about 10% of our workforce in every county and certainly our state, and 12.4% of our state's GDP. So the last thing is the fiscal note. There's an error. I don't know what they did, but again, what we're looking for is $662,500 to bring us up to a one-time grant of $1 million. We will not come back again. Thank you very much, colleagues. I look forward to working with you and seeing if we can finally get Nimble funded. Appreciate it.
Very good. Thank you, Senator. Henry Bogdan.
Thank you, Mr. Chairman, members of the committee. I'm Henry Bogdan, Policy Director at Maryland Nonprofits, here in support of Senate Bill 245. I don't want to repeat what Senator Kagan has gone over. My written testimony lays out some of the history behind this. About the marketing and demand, there are counties, and I want to make clear, Nimble is not just for state grants or loans that are slow. There are enormous problems in different counties at different times. Baltimore City, Prince George's County kind of stick out a bit, I think, but literally organizations waiting 6 months before they can draw down on grants or grant agreements or contracts. The problem with not being able to, the problem with a program at $187,000 or even a little more is if you need money, you need it now. It won't do you any good to get in line for a Nimble program where there are people ahead of you. And in the meantime, you're going to go out and use your line of credit or whatever cuts you've had to make to deal with it. The same thing you're doing now. Private foundations have stepped up over the years in these situations, but really this is a problem we should be able to solve at the state level. The fiscal note and the letter you have from the Department of Budget and Management are kind of perplexing. They are kind of contradictory if you look at them together. The senator made the point. The statute that created the program put a $1 million cap on the program. So you could try to shovel $2 million in, but everything over $1 million is going to go right back to the small minority and women-owned business account. With that, I'm going to close. I'm going to defer because I know I've got folks who've actually used the program behind me, and I'd like to give them their time. Thank you.
Thank you. Nancy Easterling.
Good afternoon, Senators. I know you're tired. You've all got things to go do, so I'll try to keep this briefer. My name is Nancy Easterling, and I run a 300-year-old National Historic Landmark down in St. Mary's County. I know several of you who have been to Solderly. If you haven't been, come down. But I am one of those small organizations that cash flow is everything. I'm not county, state, or federal, don't have an endowment, and usually don't have reserve funds. We earn everything. Some of the most impactful things that we have done have been through grants, but grants are sometimes just gut-wrenching because I've got to pay out all the money up front usually and wait to get reimbursed. And it has been months, it's been up to a year sometimes before I get reimbursed. I can't float funds that long. I found out about the program. I'm one of the lucky ones who found out about it. The first time I found out about it was for a $100,000 bond bill. It didn't see me through the whole thing, but at least it saw me through a really difficult period. And the second time was for an African American Heritage Preservation Program grant, again for $100,000. It didn't see me all the way through. As soon as I reached that $25,000, I need to put it back in. But it might be if there are more funds, more people. I know so many nonprofits could take advantage of this. I could reapply if there were funds available to help me through things. You're putting the money back into the community. We are doing the work that you want us to do in the community. And when you fund this program, it makes an enormous difference for organizations like mine. And we can get the really impactful projects done that come from these grants. So I'm in favor of this bill. Thank you so much for considering it. And I hope we can get to full funding. Thank you.
Thank you. Elise Salzberg.
Thank you for the opportunity to present this testimony in favor of increasing the NIMBLE fund to $1 million. Since 2000, I have worked as a fundraising consultant to dozens of nonprofit organizations in Maryland, and previously I've testified in favor of NIMBLE. While I applaud the passage of legislation that created the NIMBLE program, its current funding level does not reflect the original intention of the bill, which was to make it easy for nonprofits in our state to attain bridge loans while waiting for payouts on government contracts and grant awards. As it stands, the fund has enough money to provide only 7 $25,000 loans at any given time. With 32,000 nonprofit organizations in our state, clearly this is not nearly enough. Awardees of government grants and contracts are expected to start delivering services immediately using their own funds, although, as was pointed out by other people, there is often a delay of several months before they receive payments. Most nonprofits that I know don't have the capacity to absorb these long payment delays, especially during this pandemic, thereby diminishing their ability to help needy Marylanders. It's not surprising that some nonprofits have even given up applying for government grants. Providing readily available bridge loans of up to $25,000 will go a long way towards supporting small and medium-sized Maryland nonprofits that provide vital services to our communities, including healthcare, childcare, and workforce development programs. Increasing the amount available in the NIMBLE revolving loan fund to $1 million will ensure that this happens. Thank you again for the opportunity to present this testimony.
Thank you very much. Franca Brilliant.
Good afternoon. I know this is the end of a long afternoon for all of you, so I'm going to just try to lift the key points from my testimony. So first of all, just let me say hello, everyone. Thank you, Chairman Gazzoni. Thank you, Senators, and thank you, Senator Kagan, for putting forward this bill and being so persistent about it. My name's Franca Brilliant, for the record. I'm the Advocacy and Development Director for nonprofit Montgomery. We support our 200-member nonprofit organizations with technical assistance, training, resources, and advocacy on issues like this one. And I will say that contract reform is something that we hear about daily. There are so many issues around government contracting, and it is really a headache for nonprofits. During the pandemic, when nonprofits were playing an incredibly essential role at every level, governments moved to actually work around that. There was an incredible amount of flexibility. We certainly saw it at the county level. Money moved fast, money got into the hands of nonprofits. It was an impressive act of coordination and flexibility, and we really hope we can see that again. But in the meantime, it takes months and months, as you've heard. Nonprofits can't float that amount. They're asked to begin work without payment. No business would be asked to do that. And what's more, this burden falls most heavily on small nonprofits, some of which you've heard from, and many of which are very community-based or led by people of color. So there's also an equity issue going on here. The amount of money that has been in Nimble is extremely limited for the 32,000 nonprofits in Maryland. And this is an opportunity to really address that and to create a facility that would be extremely useful to nonprofits. So I just ask you to consider voting this bill in or reporting it out, I guess I should say. Right now, Nimble is a good program, but it really could be a great one with more money. So thank you again for your time and attention. And I look forward to passage of the bill.
Thank you very much. Last up, Leon Seaman.
Thank you very much, Senator, and to the committee for having me. I know the end of the party is never the fun place to be. Again, I have my written testimony, but I'm going to speak a little bit more on the practical side and hold some things up. My name is Leon Seaman. I'm the executive director of a small nonprofit called Adventure Theater, MTC, based out of Glen Echo, Maryland, and Rockville, Maryland. We serve children, about 45,000 a year, with full and part-time staff, about 200 people. That was pre-COVID. Since COVID has hit, we've lost about $1 million of our annual revenue, or about a third of our annual revenue. It's been a big hit. Going into COVID, we had about 45 days of reserve. Thanks to, as some of my colleague organizations have said, the foresight of government at the federal, state, and local level, we've been able to stay afloat, and we've gotten many grants from PPP to state entertainment venue to our annual Maryland State Art Council grant. I will tell you that our average time between when we're awarded the grant and when we get the money is 5 months. So again, overlay that with the 45 days of reserve we had going into COVID. Some other examples, just to be aware, when I first got at Adventure Theater, we were completely underwater financially, and we were one of the first recipients of the Nimble loan, and it was able to give us the flexibility to get out from predatory contracts that we had. Just as one example, we had a $16,000 a month lease on our copiers because we had to take a loan against the copiers that we were leasing. And because of the Nimble loan and the additional flexibility, it allowed us to cut that in half. So now that's $8,000 a month I can now put into the constituents, into the students, into the kids we're here to serve. And Nimble was able to get that for us. As far as this specific bill, the reason why I'm so passionate about it is when we had our fire in March of 2018, and we had to shut down, no income coming in because of the fire. And we went back for another Nimble loan. It wasn't available. They were all taken. And as far as, the demand question is there's always a need. It's just a matter of finding the nonprofits and helping them understand that this is there for them. It wasn't raised today, but I also want to emphasize the default rate on this has got to be 0 or near 0, because when we got it, what happened was when we got our state funding that year in 2017, it came out before we got the rest of the funding. So there wasn't even an opportunity for the nonprofit to play games. It was when we signed up for the program, we got the cash immediately, we were able to pay payroll. And then when we got the rest of the money that we were supposed to get 5 months, 6 months later, they immediately took it back out and replenished the fund so it could help another nonprofit. So from a logic perspective, there is really no risk to the state. It is simply how many nonprofits are you willing to serve in a given year? So obviously I'm here to testify in favor of SB 245. Thank you very much for your consideration today.
Thank you very much. Questions for the panel? Okay, that concludes the hearing on this bill and concludes our hearings today. See you all tomorrow. Thank you.
Thank you all.